This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. SK Hynix set to top Alibaba's record for foreign listing when it debuts on the Nasdaq later Friday, raising more than $26 billion, with ADRs priced at $149 each. Tech stocks look set to lead gains in Asia, with the Hynix listing lifting sentiment along with a resurgence in U.S. chip makers. And oil steadies at the end of a volatile week as the U.S. denies Iran's claims that it controls the Strait of Hormuz.
I'm Avril Hong in Singapore. Here's the setup for trading across Asia. It was really about Micron overnight, at one point jumping 9+% after the chipmaker said it's planning to increase its spending on new plants in the U.S. to $250 billion to meet demand for semiconductors. So this is an additional $50 billion from what it previously committed. And that's the boost. You can see there the big gainer on the Philadelphia Semiconductor Index. And all this is coming at the time where investors are still mulling. Where are we on AI capacity, on compute? Mark Zuckerberg saying that we want to rent out compute, not because we have too much of it, but because it's, the offers for compute are so high, it kind of makes sense. And then on chips, think about how we're not long after Samsung and SK Hynix said they'll invest hundreds of billions over the next few years to add production capacity. So that seems to be reviving the AI optimism. And as you said, that pricing, right, for SK Hynix, despite the volatility, it's on the good end. Take a look at what we're seeing in Brent as well, with traders expecting the U.S.-Iran conflict to remain contained. And of course, the U.S. says it has helped more than 800 vessels transit Hormuz since May. The macro backdrop also helping gold to rebound somewhat, although it's flat in Asia for the moment, Shery.
Yeah, but let's turn back to our top story today, because it's really all about that AI trade, right? SK Hynix set to deliver the biggest ever U.S. share debut by a foreign company, raising $26.5 billion after pricing its ADRs at $149 each. Let's get more from New York with markets correspondent Nora Melinda. Nora, this is so much bigger than just a single IPO, isn't it? Are we going to see more momentum for the U.S. ADR market?
Well, this isn't just another IPO. It's another sign that investors are pouring money into the companies building the infrastructure behind artificial intelligence, not just the companies creating artificial intelligence software. And it's also just another way to play and invest in the AI build out without buying NVIDIA directly, which we know has led this market. So you can kind of think about it as a NVIDIA derivative play if you want to, but also we are seeing just appetite being insatiable when we think about artificial intelligence more broadly. And again, just the companies that are building the infrastructure behind it is what is the focus as of late.
What does it mean for SK Hynix having this direct access to U.S. capital, especially given that we have all of this valuation arbitrage as well?
Well, this is a very big deal, especially given the fact that this is the biggest foreign U.S. IPO ever. So certainly we're expecting SK Hynix to come in tomorrow, making a splash in the New York City market. This is the third largest listing ever, topping, of course, Alibaba's U.S. debut. So there's a lot of eyes on this debut tomorrow, and we'll have to see how the company actually performs. But it certainly underscores the insatiable appetite from investors, especially given the fact that this was about over 7 times oversubscribed.
And even the government right now weighing in. We heard from Secretary Lutnick urging Samsung and SK Hynix to invest more and also expand U.S. production.
Certainly. And when you think about that, we talk about U.S. production. We talk about just building out in the United States. We did get some news earlier out of Micron talking about the fact that they were going to be pouring more money into more new U.S. plants. And so this could potentially narrow the valuation gap between Micron and this company. So we'll have to see how this company is able to play, especially as we think about how the government is viewing this development as well.
When it comes to the ADR listing from SK Hynix, from a market's perspective, how important is index inclusion, also passive investment flows going to be?
Right. Index inclusion, of course, is getting you the visibility that you're looking for. And so for a company like this that's coming in with some big numbers that we're keeping an eye on, it's super important, especially when you think about momentum and investors, not only retail investors, but institutional investors having some recognition of the name and the idea of it being able to make an impact in the space.
Bloomberg Markets correspondent Nora Melinda there with the latest on what we're expecting from SK Hynix, that gigantic listing in the U.S. And actually, Bloomberg Television, we're live from the Nasdaq with SK Hynix chairman Chae Tae-won. This, of course, as the company makes its Wall Street debut, we'll have all of that conversation, what this means for the company and investments going forward. So join that conversation on the Times on your screen.
Some other tech headlines we're tracking. Meta shares jumped in New York after the tech giant unveiled the latest version of its most advanced AI model, MuseSpark 1.1. The update includes a new paid tier for developers, marking the first time Meta has charged businesses for access. CEO Mark Zuckerberg told Bloomberg the new model has state-of-the-art or very close to it agentic reasoning, and pricing will be, quote, very aggressive and attractive. Former Fed Chairman Ben Bernanke has been appointed to Anthropic's long-term benefit trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke and 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Micron says it'll increase its spending on new plants in the U.S. to $250 billion to help meet unprecedented demand for its memory chips fueled by the AI boom. The plan adds $50 billion to a prior commitment on expanding domestic chip making that includes projects in New York, Idaho, and Virginia. Shares ended more than 4% higher. And Asian tech will be in focus again when markets open after that resurgence in chip makers powered a rebound on Wall Street. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. So, Garf, after Micron, after SK Hynix, talk to us about how good the setup is for Asia today.
Well, it's a very, very positive setup, partly because the rest of the week has been so negative. Some of that was clearly, the overhang from the risks involving the SK Hynix offering, but also that a sense that investors might have been keeping their powder dry precisely for that. We had some shops recommending that you should sell Hynix Korean shares and then buy the ADRs. So it looks like something along those lines has been playing out. We also had the apparent disappointment with Samsung earnings, and of course, we had the return of geopolitical risk, which definitely did, bring the mood down when it came to Asian equities, not just because of the direct concerns about energy supplies, but also because of what it did to bond yields, which rose across most curves. So all of that made for an environment where the perhaps overextended Korean markets took several further steps down. Now you've got the Hynix offering has taken place and gone well, it would seem. You have a reduction in oil prices, signs that the tensions in the Middle East are indeed reducing, and that this is just another minor flare-up, not a return to major escalation. So you add all that up, and you can see why we often talk about how almost every day in South Korea brings a sidecar that puts a stop to some trading in the market, either because shares have risen so fast or because they've fallen so far. And we're thinking today is going to be another sidecar one or more times because shares are going to rise.
Yeah, Garf, to your point, the massive swings in South Korea are raising some concern. Maybe there should be more restrictions around leverage ETFs. But talk to us about what we're seeing in flows as well, in terms of when it comes to the South Korean market. At some point this week, it looked like foreign selling had eased off. Is this a sort of inflection point for South Korea or, broader EM Asia?
Well, it's potentially a very positive development, because one of the things that had been raising concerns about how sustainable what was going on would be is that the extreme gains for Hynix and for Samsung in particular had forced some foreign investors to pull out at various stages because they were exceeding limits, compliance limits on over-concentration in a particular stock. If you're following the Korean market, you mechanically have to add Samsung and Hynix, but then you can't because single stock limits. So now you've got a much cleaner positioning set up where foreigners are no longer being forced mechanically to offload, and they may well be particularly interested in looking at Korean shares now. And once again, you have what's gone on recently this year. It hasn't just been about sort of mindless dip buying. It's about once prices go down, the valuations based on earnings become so compelling that you come back in.
Garth, really good to have you. Thank you so much. Garfield Reynolds, who leads our Asia M Live coverage. Now, coming up, more on the outlook for SK Hynix and the broader chip sector with Futurum, who say the age of agentic silicon is only just beginning. Research Director Brendan Burke joins us next. This is Bloomberg.
Checking Korean shares of SK Hynix on next trade ahead of the market open in Seoul. That's with its ADRs listing later Friday on the Nasdaq, raising more than $26 billion to top Alibaba as the biggest foreign debut in the U.S. market. We've seen a lot of volatility in this stock this week already. 3 sessions of losses earlier in the week, just to surge 11% yesterday. We're seeing some upside today. And of course, a lot of expectations about this ADR listing, historically commanding always premium valuations versus domestic listings. If you look at TSMC's U.S. shares, for example, they trade at around 18% premium to the Taiwan listed shares. Let's discuss what's happening right now around SK Hynix. Joining us now is Brendan Burke, Research Director for Semiconductor Supply Chain and Emerging Tech at Futurum. Brendan, really good to have you with us. I mean, SK Hynix has been doing so well, right? They have a strong balance sheet. They don't necessarily need the capital. Why do this now?
Well, hi, Shery. Good morning. Great to be with you. Right now is an ideal time to capitalize on the strategic role of memory in the AI buildout. SK Hynix has shown that it's a critical thought partner in development of novel AI systems, along with innovators like NVIDIA, and it's developing the next-gen systems that can continue high growth for the memory trade as we head into the next wave of agentic systems.
SK Hynix, has it historically traded with that Korea discount that we see in these South Korean listings? And what could this U.S. listing do for the company in terms of capital base, in terms of long-term strategies for the company?
Well, I think there are multiple elements to its valuation, not just geography. Technology companies benefit from forward-looking investments and long-term innovations, and the past cycles of 2-year rises and dips in memory pricing have led to conservatism in how memory companies are managed. And the opportunity now is to invest in fabrication capacity that can extend market leadership in emerging categories like high bandwidth memory, while creating new categories that can support the strategic role of memory in agentic reasoning. And SK Hynix has its fabrication capacity based in Korea, while most of its demand is from the United States. There is an opportunity to expand fabrication capacity closer to its customers, and also catch up to its peers in terms of CapEx intensity, finding a way to expand output while maintaining pricing as well as technological leadership.
Where could we see that expansion in terms of parts of the business? Will it be more HBM capacity, advanced packaging? Will it be other parts of the business that it hasn't explored yet?
Those are two promising areas, Shery. Advanced packaging is the critical enabler of memory scaling, especially 3D stacking of high bandwidth memory as we progress into the HBM4 era and then on to HBM5. And SK Hynix has shown a commitment to expanding advanced packaging capacity, particularly in the US so far. The opportunity is to continue expanding into new product categories, especially in areas like high bandwidth flash in partnership with SanDisk, and also exploring new technological opportunities, whether it's the creation of specific KV cache appliances for agentic context windows, or looking into things like near memory computing and doing AI acceleration within the memory cell itself. And so these are promising areas where pricing power can be extended as we move beyond the past of commodity DRAM.
Brendan, we're seeing this trend towards custom silicon, whether it's U.S. hyperscalers or even Chinese companies these days. What are the implications for SK Hynix?
This is a very promising opportunity to co-develop accelerator architectures with hyperscalers. The critical driver of performance gains for these accelerator architectures we're seeing is the amount of high bandwidth memory available to the logic chip, as well as the logic die on which that memory is stacked. And when new customers come into the market, they each have demand for memory. Up until this point, the new custom silicon players haven't achieved as much memory allocation as they've wanted, yet all indications are that they're moving forward with roadmaps, and that custom silicon XPUs could actually, in our forecast at Futurum, outgrow GPUs through the end of the decade. And that's based on a sustained commitment by custom silicon designers to their product lines. And so that's going to introduce new sources of demand for SK Hynix and encourage collaboration on new 3D packaging techniques. We're already seeing new players come into the market recently, whether it's Qualcomm with their high bandwidth memory, and that presents opportunities to really center memory as an increasing proportion of accelerator spending.
Okay. How about competition from Chinese memory makers? We keep hearing about the likes of CXMT, for example. How real is that competition, especially in terms of technological progress?
It's very serious and consideration for SK Hynix. CXMT is explicitly named in the F1 filing as a competitive threat. Yet memory gains are being made with the leading lithography techniques. We're seeing market leadership with using EUV machines from ASML for continued performance gains, even in more commodity segments like DDR5. We've seen Micron be first to market with a 1 gamma DDR5 that can achieve performance gains for a similar memory cell to prior generations. And so that's an area where China will not be able to keep up because it lacks access to those EUV machines. Additionally, high bandwidth memory is an increasing proportion of the memory market. It's going to be an increasing proportion of GPU racks going forward, and that's an area where China cannot compete as well. So as we see in other areas of the tech market, China is going to be able to catch up at the low end, but is it going to be able to capture the AI prize? That remains to be seen, and there is a moat for those market leaders that have access to the leading fabrication techniques, as well as close partnerships with leading edge fabs and then customers as well.
Brendan Burke, really good to have you with us, Research Director for Semiconductor Supply Chain and Emerging Tech at Futurum. As we continue to watch, of course, this listing massive in the U.S. and Bloomberg Television will be taking you live to the Nasdaq for a conversation with SK Hynix Chairman Che Tae-won. This, as we're awaiting that listing, we're seeing the volatility in the SK Hynix stock this week. We've seen it surge 11% in the previous session, still looking pretty cheap versus global developed rivals. We're talking about a 2-year forward PE ratio of around 4 times compared to the median of 6. This is Bloomberg.
Now, the truce between the U.S. and Iran is in limbo after a 2-day exchange of airstrikes and the reimposition of U.S. oil sanctions. Fox News reports that technical talks are underway to prevent Iran from obtaining a nuclear weapon. Let's bring in Bloomberg editor Michael Heath for more. So, Mike, what do we know so far in terms of whether there still is a diplomatic path between the two sides?
Yeah, Avril, I mean, your interest is quite accurate that it's sort of in limbo. I mean, it's not alive, but it's not dead. And as you mentioned, Fox is reporting that technical talks are going ahead. And so it sort of seems like what we've been seeing is sort of the gaps between the two sides in terms of how they understood what this memorandum of understanding meant. And you know, as it's become sort of clear that not only did the US think that there, for 60 days there wouldn't be tolls, but also ships could come and go. Iran's understanding was there wouldn't be tolls, but Iran would organise how the strait would work. And so there's sort of this friction that's happened, and that obviously there's been the fighting that's gone on. What it looks like is that more hardline elements of Iran in the Iranian leadership have wanted to make the point that they have to have control of the straits, and that's where you've seen the attacks that have happened on some ships. The US has obviously responded in kind, trying to suppress that fire with a couple of days of fairly intense strikes on Iran. So, at the same time, then we've got these sort of technical talks that have been going on, and there's been the hiatus as well, because there's been the funeral that we've seen of in recent days of the Supreme Leader who was killed at the outset. So there's a lot going on the surface. There does still seem to be things going on underneath between the two sides. But at this stage, it sort of looks like Iran just hasn't seen what it expected from the deal. So whether it's the control of the straits, they were allowed to sell oil, but no one wants to buy it because it's quite, everyone sees it as fairly high risk. So they're just not getting the benefits there.
Mike, on Iran's control of the Strait, what is the risk that it overplays its hand if it's looking to shape talks?
Yeah, I mean, look, it is an issue there, Avril, but to Iran, the Strait is their trump card. I mean, where you've seen the US not wanting to have a nuclear weapon, and that seems to be fairly, across the world, everyone wants that as well. They just see the control of that Strait, that hand they have on the energy windpipe of the world as crucial. So there is a chance, but there's still a lot to play out here.
Mike, thank you so much. Bloomberg editor Michael Heath with the latest for us there. More ahead on the Asia trade. This is Bloomberg.
Top story for us today, SK Hynix, of course, the U.S. listing. It's really a historic landmark U.S. listing. It will top Alibaba as the biggest foreign company listing in the United States. It also shows a major shift when it comes to global AI capital, Avril. We're talking about ADRs at $149, giving the company an offering of $26.5 billion. And not surprising, it was 7 times oversubscribed. This, of course, as we're seeing this incredible incredible interest in anything to do with artificial intelligence. But it's also a big deal when it comes to the U.S. ADR market. It's remained largely dormant since China's 2021 crackdown following Didi's listing. So this was really a help in reshaping global capital markets and perhaps giving an indication of where future Asian AI-related companies could go.
Yep, and as some of our guests have been highlighting, this is a good time for the likes of SK Hynix to be raising capital. Certainly, this move gives them access to those deeper pools at the time where, as you said, AI is really what is front and center, not just from SK Hynix or Samsung Electronics and its plans for ramping up production capacity. It was also about Micron's investment plans overnight. So net-net, you get a good tailwind, I think, for Asia Tech today, especially when you look at the Kospi and how futures are pointing. Maybe we see a bit of that coming through for Japan as well. What was interesting is that midweek we did see in Chinese tech a bit of rotation into the Chinese internet names. Yesterday, though, it was more about the chip makers. Those stocks seem to be gaining a lot of attention among investors with AI and the semiconductor space at a time where self-reliance is really the focus. That seems to be what's driving markets on Chinese tech as well, Shery.
Right, let's talk a little bit more about Chinese tech and turn to a company called Neolix. This is a China-based company operating one of the world's largest commercial autonomous delivery fleets. Its robo-vans run at what's known as level 4 autonomy, moving independently within mapped-out areas. Let's get more on their business and fundraising plans with Executive President Will Zhao joining us today from Hong Kong. Will, it's really great to have you with us. I understand that your company is already profitable in an industry that's really difficult and challenging. Tell us a little bit about when you turned the corner and whether you're cash flow positive this year.
Yeah, thank you, Shery. Thank you for having me today. Neolix is a company focused on the autonomous delivery. We are the totally L4 driverless company, very focused on middle mile or last mile delivery. We call it intra-city logistics. And most importantly, you are right, the vehicles actually pays for itself when we commercialize the vehicles on the road. We have business models for the clients to save money and increase the efficiency for themselves.
Yeah, tell us a little bit about your profitability, though.
Yeah, we are very self-sustaining right now. We have different business models for the clients. We have the vehicles, actually some shapers buy or lease the vehicles to use for themselves. And also we have the very promising business model called RoboVan as a service. The shippers can use the vehicle per kilometer, very similar to Uber or Didi. The barrier to use is very high, and the payback to us is very promising as well.
When it comes to growing your company from here, what are your ambitions at the moment, and where do you see the biggest bottlenecks? Are we talking about regulation, customer adoption, the technology itself?
Yes, the first barrier or challenge right now is definitely the regulation. But actually, compared with a couple of years ago, the regulators are generally right now asking how we can really open this. A couple of years ago, probably they're asking whether we should open this. So that's a huge change. The second one is actually on the integration of the operation. We are very different from robotaxi. We are generally a part of the workflow of the shapers. So we need to integrate this vehicle, this technology, into the very boring workflow of the shapers. So that's another challenge we're facing every day, but that's also the beauty of the business model. We help the shapers, we deliver the outcome. I think that's going to be the future for all the AI company as well.
In your latest funding rounds, you got a lot of capital from Middle Eastern investors, also the Hong Kong capital. Does that sort of center your base for expansion in the future as well?
Yes, Middle East is definitely one of the important market we're expanding right now. We have a sizable fleet already there in UAE, starting from Abu Dhabi, and also we have a couple of other markets in Middle East to open very soon as well. And also, apart from Middle East, we have many countries, especially in the developed countries, are to be open as well, because the labor shortage, the aging problem, and also the increasing wages are actually a common universal pinpoints for other economies. That's why we are providing a supply to the economy for the logistic companies, for the shippers, and also many business owners as well. So it's a very universal demand from different shippers, and we are going where actually the demand is.
It's interesting that Neolix focused on the logistics part of this business, right? Of the technology. We have seen other companies, for example, really focus on robotaxis, which has been really difficult to monetize. Is that the right way for a commercialization path, you think?
Yes, I believe so. I think probably in general, the physical AI will start from the boring industry. The logistics is an area actually many countries and many shippers in different countries are facing every day. It's very high frequency, very like boring job, especially let's have an example for the nighttime. That's actually the best time. The shippers or the drivers need to serve the consumers, especially for the middle mile. Imagine we're shipping groceries from a warehouse to a market, from a warehouse to a retail store. That's generally the market, the use case that we are facing, and it's actually the best time to ship everything during the nighttime. It's very different from robotaxi, but that's the actual need of the older consumers to be served, for example, in the morning when the retail store opens. So that's the general use case for the industry to happen. The autonomous driving is a very fit technology for them to use. And for example, the traffic is so good during nighttime, and the technology is ready, and also the society don't even feel it to use it. And so it's already welcomed by many different regulators in different countries. And that's some little difference between we call robo-van and robo-taxi as well.
That's a good point. Will Zhao, really good to get your views, Executive President at Neolix. Here in Japan is a thick of earnings season, and we have seen the Nikkei take a little bit of a hit this week. We saw it rise for the first time actually yesterday through Thursday, but we will be watching a couple of stocks in today's session, including 7&i and Fast Retailing when Japanese markets open. Both companies raised their full-year earnings outlook, sending their ADRs higher. Let's get more with Japan equities reporter Alice French. Alice, Fast Retailing's earnings coming in better than expected, and I'm not surprised because I see so many people wearing Uniqlo shirts.
Oh my goodness. I mean, I was just at home in the UK actually, and they're opening, these new flagship stores in my hometown of Cambridge. They're about to open another one. And I think it really is this kind of global market share growth that is behind this optimism. Of course, sales also rising in Japan too, but a bit more muted, partly because of the weak yen. But it's really that expectation for the international strength that I think is driving this, and is probably likely to keep driving the outperformance of the stock too.
You talked about Cambridge and UK, but Europe has been suffering from this heat wave. Does that also mean better sales for Uniqlo at this point?
I think so, yes. I mean, Europe has been unbearably hot in recent weeks, and I think it's set to continue over the next few weeks. And of course, Uniqlo has these, airism lines and lots of great clothes for hot weather. And I think that Europeans will really be enjoying those this summer, and there's expected to be a boost to sales from that too. But actually, conversely, in Japan, you might have noticed we've had a somewhat cooler June.
Yeah, that
right?
was surprising.
Yeah, I'm always sort of dreading June when it rolls around, but it was actually quite nicely cool this year, and that's actually been a bit of a negative for sales, I think, especially in the second half of the month. So we'll see how that goes in the coming season.
I still can't root for more heat at this point, so fingers crossed we didn't jinx it. Seven and they also had their earnings. They've been going through a lot.
They have, and look, there are lots of expectations, of course, for more restructuring, more refocusing on the convenience store business. Now, the earnings came in pretty positive. We've seen the ADRs obviously rising overnight. A lot of this does seem to be from actually better oil margins from their gasoline sales. Of course, we've seen oil prices much higher over the past quarter. Now, of course, that may, come down as we see the Iran situation, potentially coming down. But of course, that's obviously a big uncertainty moving forwards. In terms of the actual convenience store sales, they're a bit mixed, and of course, like you say, there's a lot of pressure both internally and externally, I think, from investors to kind of see that restructuring process proceeding. So over the coming months we'll see. They have been underperforming the benchmark, and I think investor expectations are really high.
Am I going crazy, or everything here in Japan feels a little bit more expensive, especially given that we have a very cheap yen, inflation rising? What does this mean for the broader outlook when it comes to retail in Japan?
It's a good question. And look, in terms of the stock market, I mean, everyone has just been focused on AI recently, right? And it's only really in recent weeks that we've seen a little bit of a rotation, I think, as people get worried about those overvaluations. And retail could be sort of coming into its own a little bit. You mentioned inflation there. Of course, it's a worry. But we do know that the Takaichi government is looking to, cut consumption tax from next year. That could be a tailwind for the sector. Of course, the weak yen is a worry for those kind of domestic retailers, but anyone that is exporting or looking for global expansion, it could also be a boost for them. And I think retail is something that analysts have been highlighting as a potential area that we might see inflows into as people rotate out of the kind of overcrowded AI trade.
Yeah, that rotation, tech sell off, sell on, it's all over the place right now. Alice French, Bloomberg Japan equities reporter here with a retail picture in Japan and, of course, the stock market moves. We have more ahead. This is Bloomberg.
India and Australia have clinched deals ranging from energy to defence as Prime Minister Narendra Modi visited Melbourne for talks with his counterpart Anthony Albanese. It takes their bilateral relationship to a new level amid growing concern over security in the Indo-Pacific.
Today we can confirm the signing of the administrative arrangement to enable uranium exports to India. The arrangement facilitates Australian uranium exports to India to help increase the share of non-fossil fuel power capacity, providing an additional market for the Australian resources sector.
Let's bring in Swati Pandey, who leads our South Asia economics and government coverage. So Swati, this, commitment to sell uranium to India by Australia was a long time coming after, I think, a decade of talks. Talk us through what has been established here.
Yes, this is quite a landmark deal, and it's really significant for India, which is really power hungry. And the uranium deal will, all of the uranium that Australia will supply will be used for electricity generation. And that was kind of the niggling issue. Australia just wanted to ensure that the uranium is not used for nuclear weapons and it's only used for civilian power generation. And once that was resolved, Australia and India agreed to do this deal, and this was one of the many deals that Modi has signed during his trip to Australia. They have agreed to deepen defense ties. They have signed an agreement on a strategic maritime roadmap. There have been some agreements around science and technology as well. So overall, it has been a successful trip for both sides.
Swati, this is coming in a week where China conducted ICBM tests in the Indo-Pacific. What have we learned about the discussions the two leaders had about the risk from China?
In the public statements that were made, there was no mention of China. However, all of these agreements and discussion about deepening Indo-Pacific ties are happening at a time when China's influence in the region is growing, and there is increasing suspicion about its assertiveness in the region. So before coming to Australia, Modi was in Indonesia, where he spoke about mutual trust, where he spoke about deepening defense ties. India will be supplying supersonic cruise missiles to Indonesia as part of a defense agreement there. And before Narendra Modi began his trip, Japanese Prime Minister Sanae Takaichi was in India, where they spoke about similar issues. So definitely, even though they are not speaking about China as a concern openly, there is definitely that an issue in everybody's mind, and which is why the other countries are trying to come together, deepen defense ties, and see how they can cooperate better in this multipolar world.
Swati, thank you so much. Swati Pandey, who leads our South Asia economics and government coverage. Another story we're following in the region. China is facing more torrential rain and flooding this weekend from a massive typhoon tracking toward the country's east coast. Weather officials say Typhoon Bavi is forecast to cross the coast of Fujian province on Saturday night with top sustained winds of up to 162 kilometers per hour. This follows recent severe storms that led to deaths and crop damage. Meanwhile, Taiwan has suspended stock trading and shut schools and offices on Friday in preparation for the typhoon. We have more ahead on the Asia trade. This is Bloomberg.
We have breaking news out of Japan. We're getting the producer price inflation numbers, growth of 0.4% for the month of June. We're talking about a deceleration from the previous month, which was actually revised higher to 1.1% growth for the month of May. Remember, in the month of May, we were dealing with higher commodity costs, including petroleum and coal products here in Japan. Here in June, we're seeing a little bit deceleration when it comes to the month-on-month number. Year on year, though, it's still growth of 7.1% and beating expectations from economists, Avril.
Shery, we have more stories from the corporate front as well. This one is interesting. Goldman Sachs has tightened its personal trading rules, restricting employees from betting on a range of prediction market contracts. The updated policy covers wagers tied to company-specific events, regulatory approvals, global conflicts, and even the future price of Bitcoin. Employees who violate the policy could face penalties ranging from forfeiture of profits to being fired. Netflix shares slipped in late trading after the Wall Street Journal reported the company is battling declining subscriber engagement. The report says it's exploring the addition of live TV channels and bundled subscriptions with other streaming services. Netflix is also said to be discussing bids for the next two FIFA World Cups. Now, it seems more young people are investing than ever before, embracing sophisticated, sometimes unconventional trading techniques that would have been unheard of for earlier generations. Bloomberg Originals has been looking at what's driving Gen Z to make bold, high-risk investment decisions. Here is a preview.
There are many types of risk, and now even trading is an extreme sport.
In this video, I will start with risking only $100 per trade.
Bro, it's simple. If you can scroll TikTok, you can trade.
You have the fear of missing out on a trade.
And judging by social media, everyone is getting rich.
We're at $232,000.
Just today, I made $16,000.
More young people are investing than ever before, and they're learning about markets in a way no generation has.
Gen Z really is distinct from other age groups. If you go on social media now, you will see a lot of sophisticated trading techniques used in ways that I think no one would have imagined a 20-year-old in 1990, 2000, or even 2010 doing or even knowing about.
I want to show you this trade I'm taking.
A lot of that activity has also broadened to sports gambling, for instance, or trading on prediction markets.
But there are worries that these investors are over-leveraged, taking one too many risks.
I've always been a big risk taker. It's kind of just part of who I am.
3, 2, 1, to the moon! Holy Well, you know what?
Gen Z has a highly differentiated view of risk.
They don't drive, they don't date, they don't drink. On the other hand, they're also this extremely risk-taking generation.
And for many, it's the only path they see to getting ahead.
YOLO stands for you only live once. So YOLO bets would refer to risky investments where the trader has an attitude of, you go big or you go home.
Subscribers can watch that documentary in full right now on the terminal and on Bloomberg.com, and it'll be up on the Bloomberg Originals YouTube channel a little later as well. But talking about YOLO bets, of course, this frenzy around artificial intelligence continuing. Take a look at Samsung SK Hynix. SK Hynix, of course, we've been talking about it. We're talking about this landmark U.S. listing, pricing its ADRs at $149, valuing the offering at roughly $26.5 billion. We're talking about topping Alibaba's the largest ever first-time share sale in the U.S. by a foreign country. Samsung Electronics futures also rising at the moment. We are now hearing from local media that J.Y. Lee, his executive chairman, is seeking to meet with NVIDIA's Jensen Huang in the U.S. in late July to discuss Samsung's investments in South Korea's southwest area. Hyundai Motor also gaining ground. But it's really going to be about the ADR listing in the U.S. by SK Hynix. And you can actually catch that conversation with the chairman, Chae Tae-won of SK, live from the Nasdaq as the company makes its Wall Street debut. But take a look at the broader markets and how we're setting up, because today, when it comes to Taiwan, we will actually have it closed because of a typhoon. But we do have these markets opening very soon. Not a lot happening when it comes to the ASX 200, but of course, do keep an eye on those energy shares, given that we're still not quite sure where the Iran war is going, the U.S. airstrikes as well. But Nikkei futures right now pointing to some upside. We had the first session of gains of the week. We're seeing a lot of volatility in this market, but it's earnings season as well. So we had fast retailing. We also had 7&I, and they came out really raising their full year earnings forecast. So we'll be watching the reaction, of course, the Kospi with all of the AI trade. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, but Taiwan will be closed today when it comes to that typhoon. Still, when it comes to Avril, the AI tide and the waves that will come through because of this U.S. listing of SK Hynix were very much in focus as we had the AI trade reassert itself in the overnight session. And also when it comes to the Iran war, people calling it managed escalation.
Yeah, to your point about this AI boom, immense demand for memory, right? We even had the Commerce Secretary of the US telling the South Korean chip giants, hey, ramp up, expand your production capacity in the US, which was a bit of an odd place to say it, given how he made those comments at a Micron event.
Yeah, given that we had seen, of course, Micron boosting those U.S. investments, and we have the commentary come when it comes to these big AI players across Asia, right? Now investing in their own economies, but perhaps could we see more fabs also being built in the U.S.? Take a look at how Japan is opening right now. Of course, this is a market full of equipment makers, chemical makers, all related to the AI trade. We're seeing the Nikkei now gain for a second session. The Japanese yen still hold at that mid-162 level against the U.S. dollar. Continued weakness, 40-year lows against the U.S. dollar. We continue to watch the JGB trade because we had continued pressure on JGBs. Of course, we had a little bit of easing when it came to oil prices, but inflation concerns continue here, especially given the fiscal risks, concerns that perhaps the Bank of Japan is falling behind the curve, despite the fact that we did see some solid demand for the 5-year auction earlier this week. Do keep an eye on some of those retailers. We had fast retailing and 7&I raising their full year earnings forecast. But It's about South Korea. Take a look at how the Kospi is opening because, of course, we had seen incredible volatility when it comes to the SK Hynix stock. We're talking about losses for the first 3 sessions of the week, just to gain 11% in the previous session. Right now, we're seeing a little bit more upside. We're also hearing from local media that Samsung's executive chairman could be actually wanting to meet with NVIDIA's Jensen Huang in order to discuss more investments when it comes to those facilities in South Korea. The Kospi gaining more than 3%, very heavily weighted towards Samsung SK Hynix, but it's a Korean won that you have to pay attention to because right now holding very close to that 1500 level. We have seen a little bit of strength because of these ADR flows from SK Hynix. Of course, it's a landmark listing here, historic in the U.S. Deputy Managing Editor of Alice Pence joining us now for more on the biggest ever U.S. share debut by a foreign company, actually topping Alibaba. We're talking about an offering valued at $26.5 billion. Explain to us why now for SK Hynix and how big of a difference it could also make for the U.S. ADR market.
Well, why now? I think it's a clear window for companies like Hynix, like other Asian tech companies, to take advantage of this fantastic mood around the industry. We've seen SK Hynix's share in Korea shoot up hundreds of % over the past year, and they decided that that was just too good to miss the opportunity to take that stock to the U.S. To offer U.S. investors an opportunity to invest directly in Hynix shares, which they haven't been able to do while they were listed in Korea. Another thing that Hynix has often talked about, and Samsung as well, is the Korea discount. They feel like their companies are unfairly valued when it comes to the comparison with competitors like Micron, that there's a little bit of a suppressed market value because they are listed in Korea. So Hynix very much wants to make up for that difference in addition to using the proceeds to spend on expanding their capacity because of the absolutely voracious demand for memory during this AI build-out around the world. So there's demand, there's an opportunity. It was just too good to miss for this company.
When it comes to expansion, I mean, it could make a big difference for the U.S., right? I mean, I talked about the ADRs market potentially really giving it a boost after it's been pretty quiet since China's 2021 crackdown of Didi, but also in the sense that I was mentioning it with Avril earlier, that it could lead to more investments into the U.S. That's what Washington wants, especially with Secretary Lutnick making those comments.
Yeah, that's right. And it has been no secret that the U.S. wants to bring more production onshore, that they've been trying to convince a lot of different companies in a lot of different industries, frankly, to bring production to the U.S. When it comes to the memory chip market, you mentioned it, it's a little bit spicy that Lutnick made this comment at Micron event. I don't know how his audience felt about it in that moment, but certainly Samsung and Hynix have both been talking about expanding production. They have earmarked huge sums for building out more capacities. Whether they will do it in the U.S., we don't know. Samsung has already broke ground on a facility in Texas, so they are underway. But beyond that, the two companies have been a little bit quiet. But certainly, there is a need, there's a demand for their products, so they do want to expand, and the U.S. does want to bring more production onshore. So what Lutnick is talking about is kind of bringing those two forces together to create more production in the U.S.
Balazs, thank you so much. Spicy, as you say. Bloomberg Asia Equities Deputy Managing Editor Balazs Pence. Now, it wasn't just the volatility, of course, where we've seen in South Korea stocks this week, also on the geopolitical front, although investors seem to think that between the U.S. and Iran, that conflict for now remains relatively contained. So you're seeing Brent in the early goings in Asia also managing to pull even further away from the 80 handle, which, of course, we hit earlier in the week. That's helping the curve overall. You're seeing lower yields, especially on the front and back end. That's struggling a little. We did see a 30-year auction, which drew the highest yield since the year 2007, which represents maybe investors are, looking for higher returns at the time where there's bond oversupply to some extent. Let's bring in Vasu Menon, Managing Director of Investment Strategy at OCBC. So, Vasu, when it comes to what we've been discussing, right, this hour about the AI frontier and SK Hynix pricing seems to be lifting some of these optimism related to the sector. What is your sense of how intact the fundamentals are? Because it's not long after these overcapacity concerns had come to the fore.
Well, the overcapacity concerns have always emerged from time to time. We are positive on the AI sector in general. We think that it's a multi-year secular theme. We think that the AI sector has the capacity to deliver double-digit earnings growth, which is probably going to outperform many other sectors in the market. If you look at adoption, AI adoption in the first few months of this year, it's accelerated. Compute demand has actually increased fourfold in the first 4 months of this year. And if you look at the adoption of generative AI, I think it stands at about 50% right now. Now, if you compare that with other transformational technologies like the internet, for example, the adoption is 90%. So there's a pretty long runway for AI. And you can see the hyperscalers continuing to spend. Micron now talking about accelerating their investments in the US, and SK Hynix raising quite a bit of funds, and also talking about increasing capacity. So I think the picture is one that's quite positive. We are still in early days. Don't forget, the AI cycle really only began in 2022, at the end of 2022. So early days still, and typically we look at historically transformational technologies have lasted 10, 15 years. So it's still early days, but it will not be a straight line path up. It will be periods of fear, negativity, concerns, as we talked about, overcapacity. But I think the overall picture appears to be one that's quite positive.
What is the best way to play it? Is it via the US or, say, EM Asia, led by South Korea? Because the concerns are how these massive swings are being exacerbated by, say, leverage ETFs, volatility that maybe policymakers look to cap at some point.
Indeed. That's a risk.
What do you see in terms of how you allocate?
Well, I think the mainstay is really going to be the US, tech plays, the AI plays in the US, as you said, because of the leverage ETFs, and in South Korean stocks are going to be very volatile. But we are firm believers in diversification. We don't think that, investors should ignore one or the other. It's a question of how much you invest in each. And both have a lot of potential, except whoever's investing in the AI sector, whether it's US or through Asian tech companies, like the South Korean chip makers, for example, you must be ready for that volatility. The AI sector is a highly volatile sector. The trend is one that's pointing towards the upside, but it's not going to be a smooth ride. It'll be, basically a very volatile ride for many investors. And as long as you're prepared for that, and as long as you diversify your investments across markets, Japan, South Korea, China, the US, I think there are opportunities in all these markets.
Yeah, I mean, Japan not to be left behind in the AI game, right? We have that play via Kioxia as a memory name, and it's up in trade today as well. But talk to us about the diversity in terms of, say, Chinese tech. Has all the macro weakness been priced in? How much earnings visibility is there?
Well, of course, with China, there are a lot of concerns about the macro picture, as you mentioned. The property sector, the overhang, right, in the property sector, the glut in the property sector, the slowdown in the economy. Those things are weighing on Chinese stocks in general. So if you pick the MSCI China Index, is down year to date compared to the MSCI Global Index, which is up 10%. Right? But at the same time, you look at the onshore market in China, the Asia market in China, the CSI 300 index is up by about 7 to 8%. So there are going to be opportunities in China, but the markets are very focused right now on the US, South Korea. So China is taking a back seat, but China could make a comeback. I mean, because China is also making its inroads into the AI tech space, as we've seen with many of the LLMs being, unveiled in China, giving US LLMs a run for their money. So clearly opportunities in China, but the problem with China is, I think the macro picture continues to weigh on the market, but we see that as an avenue for investors to look at Chinese stocks as well. Again, we think that, keeping a diversified basket of tech stocks, including Chinese stocks, makes sense.
What about the war? I mean, how much does that matter now for investors?
Well, I think it matters less and less. It mattered a lot a couple of months ago, but it matters a lot less. And I think the markets have come to terms with the fact that the US and Iran, you will see skirmishes from time to time, but it will not escalate and go out of control. So I think what's interesting is the US, when they attacked Iran, they did not attack Iran's energy facilities, right? And Trump appears to be saying that this will not go out of control, it will not escalate. So I think at the background, I think the US wants to make sure that they control the situation, Iran as well. So I think it will take a while before they hit middle ground. Will not be an easy path, but I think the worst is over and the best is probably yet to be.
Vasu, we'll see how that pans out in the second half. Thank you so much. Vasu Menon, Managing Director at OCBC. Shery?
And Avril, here in Japan, we're actually watching a couple of earnings results. The likes of Fast Retailing, 7 and I. Surprisingly, today, a down day again for these two retailers. We're talking about Fast Retailing, a third session of losses, 7 and I, a fourth session of losses, despite the fact that these two companies raised their full-year earnings outlook. Fast Retailing, for example, raised their annual profit outlook to 730 billion yen. Their Uniqlo business doing pretty well, rebounding in Japan. We continue to see overseas demand. 7 and I also raised their profit outlook, and of course we're watching very closely its turnaround efforts. Both stocks down more than 2%. This is Bloomberg. Perhaps a little bit more risk-on sentiment today across markets, with the Asia-Pacific stocks pointing to some upside and Brent prices continuing to fall after topping $80 a barrel at one point yesterday. We have right now the understanding from investors, analysts, that perhaps Washington is continuing to avoid these direct attacks on Iranian energy infrastructure. In fact, Fox News now citing U.S. officials saying that technical talks between the U.S. and Iran are continuing despite the latest outbreak of hostilities. Let's get more with Bloomberg Managing Editor GLDC. So investors have been calling this perhaps managed escalation when it comes to these strikes on Iran. Where are we at right now?
Hey, Shery. Yeah, so there's a couple of things that I would point to that actually may provide at least some cautious optimism that there's still some kind of ongoing negotiation here, particularly after the last few days when we've seen some of those flare-ups and attacks and violence. So first of all, we have heard from a U.S. official who's saying that the U.S. is still committed to these talks. I think that's one thing that does indicate that despite some of the rhetoric that you've seen publicly, there is some indication that, the U.S. And Iran really do not want to return to that sort of full-scale violence that we were seeing earlier. The second thing I would point out is that, look, Shery, at this time, over the last couple of days, we had heard from U.S. Central Command that they were resuming attacks. Was pretty in the air there. We haven't heard that today. So again, does kind of indicate that things seem to be calming down. And then the last point that I would make is that in part, talks were suspended this week because Iran was observing the funeral of its former supreme leader, Ali Khamenei. He was killed on the first day of this war. So that does indicate that maybe there is some room now that those funeral rites have concluded for talks to pick up a little bit more. But as we were talking about at the beginning of the segment, we are seeing at least some indication that maybe technical talks are resuming here. So again, obviously, there's been a lot of twists and turns in this entire process, but that does indicate that potentially things could continue as these two sides try to negotiate through these peace talks.
Does it raise the risk that Iran is now targeting Gulf neighbors, U.S. bases in the likes of Bahrain, Kuwait, Qatar, for example?
Yeah, I do think that there's a couple of things that I would point out when it comes to some of these targeted strikes. When you look at the scale of attacks, obviously concerning that neighbors are targeted, but when it's military bases, military sites in some of these areas, that does indicate that maybe we're not seeing yet the level of escalation that we were seeing earlier in this conflict. I mean, remember, Shery, when we were some of the most severe escalation of concerns over this war, it was when we were seeing targets on LNG facilities, other really critical energy facilities. Military bases is, I think, in terms of measuring that escalation, a step below that. So that is something to kind of continue to monitor, though, is what types of sites the two sides are ultimately targeting. I think earlier this week, Trump, briefly raised the specter, the threat of targeting Kart Island in the Strait of Hormuz. That would be a severe escalation. Obviously, that we're still kind of on alert for those types of things, that may ultimately raise further concerns here. But again, I think it's really critical to look out for whether or not there's energy sites that are targeted here. Otherwise, it does seem like potentially we could be seeing some more negotiations going into the weekend. But I say that now. It's still obviously like a lot of changes could happen in this conflict. We've already seen that obviously over the last several months. So we'll have to see ultimately how these two sides progress.
Thank you, Bloomberg Managing Editor Jill Deasis there. Now, speaking of energy, of course, we've seen how Australia has agreed to sell uranium to India for power generation in a landmark deal signed during a visit to Melbourne by Prime Minister Narendra Modi. India says it'll use the uranium exclusively for peaceful purposes as it seeks to boost its energy capacity. Modi and his counterpart Anthony Albanese also signed a joint declaration on security, including cooperation in defense industries and counter-terrorism. Another story we're following in the region. China is facing more torrential rain and flooding this weekend from a massive typhoon tracking towards the country's east coast. Weather officials say Typhoon Bavi is forecast to cross the coast of Fujian province on Saturday night with top sustained winds of up to 162 kilometers per hour. This follows recent severe storms that led to deaths and crop damage. Meanwhile, Taiwan has suspended stock trading and shut schools and offices on Friday in preparation for the typhoon. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at the stock of Australian telco Telstra after it sank on Wednesday. It's pretty much flat for the week. Now, it was reportedly warned by government agencies and academics that it was vulnerable to the type of major disruption that hit the country's biggest mobile network this week. The national broadcaster ABC says the warning centered on timekeeping software. Let's get to Sydney, bring in Bloomberg's Kameli Argana. Kameli, what sort of questions do these Tesla outages raise about Australia's infrastructure reliability? Because it's not coming very long after the Optus network failures.
That's correct. So there's definitely questions to be asked about the reliability of the infrastructure that we have here in Australia. Now, just a quick recap about what happened. On Wednesday, Telstra reported some issues with some mobile calls and data connections happening. That also impacted a lot of regional train services in the outer regions of Australia's most populous states, New South Wales and Victoria. Now, as of Thursday, it looks like those train services are starting to ramp up a little bit. Telstra has also mostly resolved those issues with mobile connections and data. However, it still very much raises those concerns, especially, as you mentioned, after that Optus outage that happened in September that was linked to 4 fatalities. The situation happening one-off, not so much of a concern, but because it's happening in this context, it really does raise concerns. Now, these telecommunications stocks such as Telstra are usually seen as a defensive play within Australia's market, but much of that thesis hinges on that actual reliability of the infrastructure. So there's definitely some worries there.
Yeah, I was just about to ask, how defensive do these stocks, such as Telstra's, actually look then, given these concerns?
Yeah, so it's facing a lot of recent headwinds, and I think these outages don't really do anything to help with that. So shares have rallied in the first half of the year or so because of its reputation as a defensive stock. We've had a lot of volatility in the market with the Iran war, as well as the economic backdrop. So it's been performing quite well. However, we've started to see a bit of a sell-off in May due to those valuation concerns, the changing economic backdrop. And another aspect as well that I wanted to highlight was the SpaceX IPO, sort of bringing these telecommunication stocks in the spotlight. There was some concerns amongst the analysts and the market community about how this satellite network that SpaceX was going to introduce and its ambitions there would impact competitive pressures for Telstra, for Optus, for Vodafone, for TPG Telecom. So it's already been facing some headwinds. Now, this infrastructure concerns, these outages, don't really do anything to help that. As I said before, a one-off instance, I don't think it will. I would not expect it to impact the earnings outlook in the near term, as long as they're able to fix it relatively quickly. But if you compound it with all of these additional headwinds that's already been affecting the shares leading up to this, I think there's definitely some concerns and some big questions to be asking.
There, Bloomberg Australia New Zealand equities reporter on Telstra. And here are some of the other top corporate stories that we're tracking. Meta shares jumped in New York after the tech giant unveiled the latest version of its most advanced AI model, Muse Spark 1.1. The update includes a new paid tier for developers, marking the first time Meta has charged businesses for access. CEO Mark Zuckerberg told Bloomberg the new model has state-of-the-art, or very close to it, agentic reasoning, and pricing will be, quote, very aggressive and attractive. Former Fed Chairman Ben Bernanke has been appointed to Anthropic's Long-Term Benefit Trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke and 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Micron says it will increase its spending on new plants in the U.S. to $250 billion to help meet unprecedented demand for its memory chips fueled by the AI boom. The plan adds $50 billion to a prior commitment on expanding domestic chip making that includes projects in New York, Idaho, and Virginia. Shares ended more than 4% higher, and in that event, we actually had Commerce Secretary Lutnick talking about how Samsung and SK Hynix should also be investing more in the United States. Take a look at that stock, because that's a landmark U.S. listing that we're awaiting from SK Hynix. A very volatile week for this stock. We're also watching Tokyo Electron this week. We heard that they're cutting their delivery time by half, according to local media. That bodes well for the stock. Kioxia Holdings, we had learned earlier this week that Bain Capital has exited this stock after more than 4,000% gains since its IPO, but we're heading for 3 weeks of losses if we end at this level of gains. This is Bloomberg. Mixed picture across Asia right now. We're not seeing a lot of movement on the ASX 200, perhaps not surprising given that we are seeing the energy sector as one of those laggards in today's session. Of course, we saw the big surge as the Iran war escalated. We had the U.S. airstrikes, but right now investors calling this perhaps managed escalation. We continue to see, according to media, these technical talks between Iran and Washington. So we'll be watching that as the ASX 200 holds unchanged. The Nikkei gaining right now for a second session. Do watch out for the Japanese yen. We are hearing from the likes of Mitsui Trust that perhaps that intervention level no longer is this 40-year low against the U.S. dollar, but perhaps even weaker towards that 163 level against the U.S. dollar. We had heard from the growth minister here in Japan saying that the BOJ's independence must be respected. Of course, some of the concerns around Japan has always been perhaps that the BOJ is staying behind the curve, but it will really be about the Kospi and the SK Hynix listing. We're actually seeing SK Hynix fall in today's session, recouping some of those gains, especially since that 11% surge, Avril, that we saw yesterday.
Yeah, as we know, these stocks are notoriously volatile, but it is about the AI boom. So take a look at what we're seeing on the TAIEX futures, right? They're pointing to upside when trading reopens, but markets will be shut today. We have been seeing this week, though, that bit of rotation into Chinese tech names stalled a little bit on Thursday. We'll see how today pans out. But this is, of course, against the backdrop of still a lot of optimism for Chinese tech, particularly the hardware side of things. You think about the Chinese chip foundry Nextchip and how it's expected to begin trading in Hong Kong on Friday after raising $890 million in a share sale. That company priced the offering at the top of its marketed range, but with a 57% discount from the Thursday close for Shanghai-listed shares. It says proceeds will primarily fund tech upgrades. And then, of course, not to be outdone, think about Minimax. According to terms of the deal seen by Bloomberg, it's seeking $1.9 billion from a share sale with convertible bonds. And this is coming in a week where we learn about Zhipu's $4 billion share sale. That is how much it raised. And given that bit of news, we still saw Zhipu shares rallying yesterday. It'll be interesting to see how these AI model company stocks fare in trade today. There still seems to be a lot of enthusiasm for them. Let's discuss more on China's AI sector. Bring in Wei Sun. She's principal AI analyst at Counterpoint Research. Wei Sun, good to see you. So there's so much optimism towards Chinese AI. This is coming in a week where for DeepSeek, Zhipu, we're learning maybe they're looking at their own AI chips. Talk to us about how you view this. Is this a sign that, maybe there's more confidence in the Chinese AI ecosystem?
Yes, definitely. I think although it's not confirmed news, but I think it's a very logical next step for DeepSeek and even Zhipu to seek like a chips sufficiency, because if we see look at in the past, there are a lot of dramas and uncertainties going on, and the standing that China has in terms of chips self-sufficiency, in my point of view, is more stronger than before.
This is also coming at the time where global players for chips, they are trying to raise capital. Talk to us about for these Chinese AI developers and the extent in which, their CapEx focus, given how these inference costs are rising, what are the economics behind that?
That's a great question. Actually, take Zhipu, for example. So the money they're looking to raise is going to be spent on a couple of things. So first of all, it's the R&D, the research and development. That includes the model iteration, the agent infrastructure building, and also something paved the way to the enterprise deployment. And also they're looking to use the money for the talent training and also some computing, cloud computing expenses. So in my point of view, those are the focus of these Chinese companies, especially the leaders like Alibaba and Tencent. They're spending their capex, overspend their capex plans in terms of computer, computing, and also the expenses that associate with that. So in my point of view, this is a very cash-burning business, and but everything the Chinese companies are looking into, they're kind of like all in to that areas.
This is also coming at the time where, as we know, NVIDIA's restrictions, maybe restraining Chinese developers to some extent, but, they're managing to still get ahead, to advance, to develop. With, word that China, maybe easing those restrictions on H200s, how might that move the needle?
So this is a very interesting phenomenon, actually, because we are looking at a very important factor, which is the diffusion velocities in the entire economy. So the thing is, it is not, so the productivity of the societies or coming from the industries is not solely depends on the most advanced chips or the most frontier models. It's a combination of how fast the society and the industries are absorbing those AI technologies. So I think China is taking that view in terms of how to maximize the pace of the industrial development by using the good enough chips and also good enough models. And there are a lot of policies associated with that to accelerate this kind of pace.
We also learned this week that maybe they being Chinese authorities might be mulling ways to restrict access to overseas, with the companies or consumers as well, to these local AI models. What do enterprises need to consider when you're looking at these US and AI ecosystems, right? Whether it's with costs or access or how advanced either models are?
Well, so there are two aspects I think I want to elaborate. One is that it is a very good signal that Chinese open source models are getting so competitive. For example, a San Francisco-based startup called Lindy just announced a couple of weeks ago that they're switching from Claude to DeepSeek models. In this case, they're saving up to 90% of their inference costs. So this is tremendous value to startups and companies who are looking to deploy Chinese open source models. Now, the position turned in a little bit that the ball is actually falling into the court of China's position, that it can have a lot of defensive moves, similar to what US was taking in terms of chip ban policies too. So that there's a lot of options, but I think it's still too early to judge or to see if this is the next step that the government or China is going to take, because the ecosystem that open source models are building are getting much more absorbed and then penetrated in global AI ecosystems. And that's a lot of value in terms of using AI, using China's open models.
What might hold these AI models back, though? Because you think about what they're perhaps built on, including memory, the local names, such as Changxin, for example, they're not there yet on high bandwidth memory. What do you see as something that could restrain AI models in development?
Yeah, so the bottlenecks definitely falls into a couple of categories. For example, the chip supply, the most advanced chip supply, the cloud computing power, and also like the infrastructure that builds around it. And in my view, because the trend of industries is getting from the model the model competition to an agent competition, more like on a commercialization point of view. So the market will keep pushing those companies to bring more and more, better products and the chips and then optimize for specifically Chinese open models. That's most likely to happen.
Wei-san, really good to chat. Thank you for the time today. Wei-san is Principal AI Analyst at Counterpoint Research. And Shery, let's continue that conversation when it comes to Chinese AI, especially when it comes to these memory names.
Yeah, CXMT is the one that we're really focusing on because it's emerging as one of the world's most important chip makers. A Bloomberg scoop revealing how it's building a network of homegrown suppliers to protect against even harsher curbs from a U.S. government keen to maintain its technological edge over China. For more on today's Bloomberg Big Take, let's bring in technology reporter Gao Yuan. Gao, CXMT, I mean, it's been shocking how it's emerged as potentially even being talked about as a contender to become an Apple supplier at this point. So what are its strengths right now?
Exactly. No one have heard of that company, especially out of China, I believe, before this year. Now it is emerging as one of the top contenders to have the top edge memory chips to supply companies like Apple and many others actually. So it comes from a long way, but for now I think they are really trying to expand the capacity and getting in ways into the more advanced HBMs that will help like build AI build outs. So for them, it's a really amazing journey. What we did in the story was we have identified 3 companies that basically help them with this efforts with the chip design, chip manufacturing, and testing, so that they can expand the capacity more quickly.
sort of building an entire supply chain when it comes to this sector, right? Is that because of all of these export restrictions, the tech restrictions that we have from the U.S., the sanctions, how does CXMT work around them?
Correct. That's definitely one of the biggest reasons. If you look at China's AI effort, it's really want to have control on every stack of the industry. From models that we just discussed that in the previous section, that companies like Minimax and Alibaba, there have lots of companies doing that. And for chip making, we have SMIC and we have Huahong, which is a little bit less advanced, but the backend SMIC. But in terms of memory chips, there isn't too many players in this industry. That's why CXMT is emerging as the best shot actually for China to advance in this sector. So basically, that's the new strategy for China to build up an entirely self-controlled supply chain in semiconductors AI.
The talent pipeline is also very important for Beijing at the moment, right? What are we seeing in terms of CXMT when it comes to trying to get those engineers into the company expansion plans?
Well, they offer lots of money for sure. Another thing is they also wanted overseas talents to help them make advanced technologies. One hurdle, though, is that if you see the South Korea and Taiwan, they have lots of concerns about Chinese tech companies poaching their talent. So there have been some trials in South Korea about possibly allegedly that some ex Samsung engineers leaked the Samsung technology to Chinese companies like CXMT. So there's that concern. But anyways, for CXMT, majority of the talent pool, I should say, is from China, but they also want the top talents overseas to help them compete against Samsung and Hynix in the future.
Bloomberg technology reporter Gao Yuan with the latest on CXMT launching China's biggest IPO of the year. Also ahead, a new episode of Bloomberg Tech Europe, which looks at how the region is moving forward with its own space agenda. Catch Tom Mackenzie's interview with the Director General of the European Space Agency.
We see now, of course, with the IPO of SpaceX that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
Catch the full episode of Bloomberg Tech Europe later today at 3:30 p.m. in Hong Kong or 8:30 a.m. in London. But we do have more ahead on the Asia trade. Do stay with us. This is Bloomberg.
Let's take a look at emerging market assets. Given the retracing in oil prices, the US-Iran conflict more or less staying contained, the environment has certainly improved for emerging market assets, particularly those that are energy import dependent. But you think about as well, despite what we're seeing in the dollar moving sideways, given how the Federal Reserve and the Bank of Korea have been sounding a bit more hawkish this week, what is the setup going to look like in the back half of the year? Certainly what's propelled EM stocks for the first half has been the likes of South Korea and Taiwan, thanks to artificial intelligence. Now, AI is fast becoming a new measure of global power, built on chips, infrastructure, scale. In the first episode of Bloomberg's new monthly podcast series, Emerging Menaka Doshi explores India's dilemma of trying to achieve AI sovereignty without owning the most advanced layers of the tech stack. Here's a preview.
The US is known for still maintaining a lead in frontier models. China, I believe, is the highest AI publication rate, highest patent output in China. South Korea has, I believe, the highest innovation density in terms of patents per capita. In the next 3 to 5 years, will India join that rarefied group? And if yes, for what accomplishment?
What I would like India to do is also have status, frontier status in terms of having frontier models as well as having papers and patents, which, I mean, we already have the third largest number of papers, research papers published. Yes, quality of papers may be a different question altogether, but the number of high quality papers is also increasing at a very rapid pace. India has amazing talent. Once it's unleashed, I think you'll see progress. So whether it's papers, whether it's models, applications, all these metrics, India could be a leading player in the world.
Srikanth, why are you wishing a frontier model for India?
I think India needs a frontier model because just think about
why.
From a sovereignty standpoint, we discussed that having a frontier model is crucial to that, not because we don't want to use other people's models, but we also need some models that are working on some of the most critical security sensitive areas like defense and other areas. So it's super important that India has that, because even if you look at the latest models like Mythos and Fable 5, why do we think they are a threat? Because they have the ability to persist and find multiple ways and get to the outcome and work for 10, 15 hours at a stretch without making a mistake. That is their power, right? If that can be done, it means that India's security systems can be under attack. So we need sovereignty from an AI standpoint. So these models have to be built.
And the frontier model capability will also extend to small models, by the way. I mean, it's a capability.
Sure. I just felt like it brought us full circle in the discussion around sovereignty.
And I would like to just add one more point, right? I mean, when I say adoption can be our big USP, it needs to translate into products. We cannot be doing body shopping in the name of adoption, right? Adoption should let startups build deep tech products, platforms. It should be platforms that lead to adoption.
And the first episode of Emerging is available now across platforms, including YouTube, Apple, and Spotify. We have more ahead on the Asia trade. This is Bloomberg.
Hong Kong's restaurant industry has been feeling the pinch as more residents head to mainland China for their weekend leisure and dining. Now officials are betting that a different kind of customer could help bring diners back. With pet owners making up roughly 10% of the population, authorities see furry companions as a potential boost for the city's struggling eateries. Let's bring in Bloomberg opinion columnist Juliana Liu. And I have to say, I probably know all of the pet-friendly places here in Tokyo. There are more people like me in Hong Kong. How significant could this be for the industry?
Shery, do you have dogs?
Definitely, I got dog. Bobby Bobs is going to make his appearance today for his Bloomberg television debut, and our producers have this footage ready. But yes, I mean, this is significant, not only for people like me.
Yeah, absolutely. As you know, Shery, the restaurant industry in Hong Kong is really struggling. Total restaurant receipts are down 8%, or down 8% last year compared to 2018. So that was the last full year before the anti-government protests, COVID, and integration with China. So restaurants pretty hard hit. Chinese restaurants in particular down 26%. So you can see the impact this has had on the restaurant industry. And the reason is because post-COVID, Hong Kongers really are enjoying their wanderlust. They're going abroad. They're also going to China. So the numbers are really big. And it's particularly noticeable on weekends and public holidays when it seems like half of Hong Kong is in mainland China. And the reason is because services, restaurants are just so much cheaper in China than here. There's so much involution going on in China, and it's not just heavy industry, it's in service too.
Aside from all of my photos with the Bobby Bopples, you can see so many dogs and so many of our own people, Bloomberg, who have pets at home. How much can this help all of these restaurants struggling?
Yeah, so what I'm arguing is this is absolutely a move in the right direction. Hong Kong banned dogs in restaurants back in 1994 due to health reasons. And as we know, the government doesn't move so quickly. So the fact that they're willing to do this shows that they are starting to take a look at what the industry really needs. I don't think that this move on its own is going to change things around completely for the restaurant industry. It's still very, very difficult. There is a talent issue with bringing people into F&B. Costs are very, very high. And as we know, demand is low because people are leaving. And also tourists coming into China, into Hong Kong, haven't recovered as well. It's down about a quarter from 2018. But I think what this shows is that it demonstrates the government is trying to look for solutions. And certainly restaurateurs that I've been speaking with think this is really great because this gives them another avenue to promote their services. That said, dogs, cannot be eating with their owners at the table. They need to be leashed and they can't be too far away from the owners.
Juliana Liu, our Bloomberg opinion columnist, that is totally not the case in Tokyo, where Avril have actually been to a teppanyaki place with Bobby Bobs.
Yeah, certainly we're seeing this pet pageant of sorts, right, Shery? And it's so interesting. Some of our producers' pets have also made it into that video earlier, putting us all in a really good mood for Friday. Also in a good mood, take a look at what you're seeing in the tech stocks. That's propelling the Kospi as we look ahead, of course, to the open of trade in the Greater China markets. Taiwan will be shut today, though. Of course, the other thing we're watching is SK Hynix's big trading debut in the U.S. Plenty more ahead. Keep it here with us on Bloomberg.